some of these people, these guys and girls, they are so resilient. They are not giving up. They're making every last dollar last. And I've told them this. I'm like, again, our business, our model is we're supposed to lose money. Not a lot of these, all of these are supposed to make us like 100x. I wish they would, because this would be the game to be in. But it's just not. It's not how it works.
Welcome to Venture Voices, where we interview emerging managers within the venture ecosystem. I'm Richard Kerby, a partner at Eco Ventures, and today we have the pleasure of having Shawn Merani from Parade Ventures. Shawn, welcome.
Thanks for having me, Rich.
No, I'm excited to this one. Shawn's been a dear friend for a while, so looking forward to kind of sharing the Parade story with all of you. But I guess with that said, let's just start at the very beginning. Where did the name Parade come from?
A great question. Sometimes people ask, sometimes they don't, and I always chuckle when I give the answer. It happened it happened on my couch. I was watching TV. I was on my iPhone, like a lot of people do, and I was going to start this venture firm, and I needed a name. And the first thing that popped in my mind was the animal, an elephant, and I thought elephant VC. If number one was already taken, number two was just kind of boring. And so I was trying to like Google things that had to do with elephants and just riff off of it. And I said, what is a group of, I kind of Googled what is a group of elephants? And it's not like an official dictionary term, but it's sometimes referred to as a parade. And so, I was like, okay, and then there's multiple meanings on a parade. It's a celebration, right? Hitting a milestone, raising funding, exiting, and just operating and being part of this community should be exciting and a celebration. And so it kind of had this double meaning. And then an elephant, a really smart creature, homage to my Indian heritage. So just like it's like has a lot of depth to it for me. And then more importantly, the URL was available, right? Like, so I got parade.vc. So I went up, I snatched it, multiple variations of it, and here we are. So that's the story.
Nice, nice. Well, getting the URL is very, very important, hard to do these days. And so
Not for ten
kudos to
thousand
you on.
dollars, like just on name.com is where I picked it off.
Yeah, nice little $10 URL does the trick sometimes.
There you go.
But and I know that you guys focus mostly on the B2B side versus B2C. Are there particular themes? Obviously, B2B is broad in nature that you're kind of spending time in. Coming here in 2024.
Yeah, I mean, I think we have like an overarching theme of the fund, but I think, what I've learned from my venture career now, stretching to 10 years is every successful investment is driven by the people that run the business. So I always try to I tell when LPs ask me that question, I say, the investments we do fall in one of two buckets. It's stuff that we know, and it's stuff that we want to learn about. But ultimately, we're not so stuff that we know, things that we've learned from other investments, operating background, learning, how a product is used from one of our investments, or stuff that we totally don't know anything about, but we're like, that's cool. I kind of can wrap my head around the macro ideas around it, and we want to go learn more. But usually, especially in that latter bucket, and all of the buckets, is driven by the people, their story, their edge. How can they solve it? Really you want to know. And Rich, I know you share this kind of similar mentality. Is like, how, are they going to be able to? We want to find out as early as possible. Is like, do they have the gravitas to raise more money, hire people, get people to walk away from other high-paying jobs to come work for them, right? To get that leverage, that operational leverage to build something, really interesting from the start, because you're not going to be able to be competitive, with the Fang or whatever we're calling those companies now. So, I think, we look for that. And so like every time I've taken a haircut on people and bet on traction or sector or heat or deal dynamics, it just never worked out. And it's never brought me joy, as a partner, and partnering with those people. So like, that's really also important to me. I kind of like use that to alter my framework.
Yeah, no, I'm definitely with you there, and the fact that people are going to win or lose, and so optimize there, and hopefully the rest can take care of itself on that front. So definitely align on that front. But once again, we're a early stage seed fund. So are you. There's I can't remember the latest count of how many of us exist now, but it's a number in the thousands, and so leads want to believe that there is lots of like competition for dollars here, and so how do you think about Parade differentiating amongst the plethora of seed stage focused firms out there?
I mean, I really struggle to answer that question because I don't know. some people, come and approach us and say we've heard about you. Some people will say we've never heard about you. So like I can't like flip it around and really appreciate, what people think about us. Like I don't have 100,000 Twitter followers. We have some, but like nothing, that's going to create an audience. I think it's more important that we see high quality deals that we can, that we can find, that we can build a unique portfolio of high conviction, really strong founders and strong ideas. So that's really important. Number two is we just, and I think Rich, you can corroborate on this, and I think you're very similar. Is like we figure out pockets to take risk. Like we're not investing in generative AI right now, and I know a company you're going to ask me about later. MoveWorks is like they're an AI machine learning company. We invested in 2015, 16. I don't even remember. $2 billion company. The whole thesis from the get go was AI machine learning. Like they had the CTO Vaibhav is a PhD in data systems and from Stanford, right? So it's like, or that's probably wrong. Sorry, Bob, but like, like something really technical to solve that problem. Anyway, so we just take risks when people when in areas when before they're hot. And so usually that means is there's less competition from a venture perspective, and we can focus on building that relationship with that founder. And it's not, we don't care about deal heat. I used to care about that type of stuff, and when I was figuring out who I wanted to be and how to win at this game. But then I just learned it's like some of my best investments, going back to many years, was stuff that wasn't competitive, or we had, we really spent time with the founder and we had a unique perspective on what they were solving for, right? Just really simple, like atom level stuff. And so we try not to get too caught up in the hype. And that usually, I think, will enable us hopefully to create a successful portfolio. Too early to tell now. We're still a very young firm at Parade, and I know we talk about this a lot, right? But, I think there's a lot of promise in the portfolio.
Yeah, no, I mean, I think that really resonates with me as well, particularly on the the deal that's not hot or overlooked or been passed on many times. Once, as you mentioned, it allows you to kind of spend more time with the founder and team, learn more. But it ultimately you want to have like a contrarian bet today that becomes non-contrarian X number of years from now. And it sounds like that's been a big focus for you at
In
Parade
hedge
as
fund
well.
land, that creates alpha, right? That creates alpha, right? Like that's what they call it. So it's like 100% right.
Yeah, yeah, contrarian to consensus there. And then, you mentioned, building the relationship with the founder there. Obviously, like, the venture game amongst our peers as well as the founders that we work with is very, very relationship driven. How do you do that with your founders as well as your peers in the industry?
So with our founders, like kind of what we tell them, we'll at a minimum, we regardless, like we're on board seats, but that's not like a mandate for our firm. We're ownership driven, and it really depends on the dynamic of the investors around the table, where we take a board seat or not. But regardless, we meet our founders every other week at a minimum. We strive to be their first call, and I'm fine saying that we are that in most cases, if not 1A. But we more importantly that they 1A meaning they can call us anytime, and there is that relationship. And so that's how we're able to build a really strong like we try to build a relationship before investing. Very hard in the hot times of 20 and 21 when deals were moving so fast, and so we sat out. But if you can figure out, with high probability that okay, I can communicate with this person, and then you after investing you continue to build that relationship with a consistent cadence where you're not only getting to know them, but you're also learning about the business. I think when it comes to the harder conversations, like hey, you need to make a big change, especially in a negative circumstance, right? Or things aren't working from a product market fit. You can just have harder conversations if you have that relationship. On the venture side, I think, as you said, we've known each other for a long time. So a lot of us in the business, we've just been around, right? And so we built relationships, whether we work together or not. I don't think we've done a deal recently, but we've done them before together and are always sharing ideas. But ultimately, we don't do too many deals a year, so it's really hard. I think people forget how hard it is to make it all work. But I think what I've really leaned on, and I know me and you, we used to go to a lot of networking events back in the day, really kind of just, I think just went all in on building relationships. And I think now, and I'd love to hear your perspective, but it's like high quality, smaller, more intimate settings, with existing relationships or with existing people that we know, like you and myself, and then we each bring in someone new, that we both think is high quality, so that we can get to know each other. But that's kind of what I've done as I've gotten older, had a family, have, less time on my hands and other priorities. And also just like running parade, right? I'm trying to be more efficient with that. But I think, I'm really lucky, that some of those relationships that I built early have paid off, from especially like a bunch of those people. We were all operators together. So part of it was part of my job, like, doing BD with remember like when Ryan Sarver was at Twitter, Nahal Mehta was running this company called Local Response, Satya Patel had just left Twitter. Like we were all operators, and so that's how I know those folks. And now we're all, or at least we're investors, right? So
Yeah, no, I mean, I remember those younger venture days of hitting the pavement pretty hard at an event a night a week, basically, just going bonkers with you and others. And so, yeah, different way of maintaining and
now,
building
now I'm
relations
bed. I'm
nowadays.
in bed. I'm in bed at 9:30, and I know you are too, dude. So
That's too funny. And then, you mentioned, I guess, in your previous response that you talk to your founders every other week at a minimum. How do you think about that, value add and support with your portfolio company founders, aside from capital, which is, abundant these days?
yeah, I mean, it's just like being, I try not to like quantify the value add too much. It's like, I even tell us, every time I talk to founders, like every team is different. They all have their different strengths and weaknesses, and they're all not, those are not all going to, some of them they're going to be self-identified before you invest, but some you're going to like learn about as you get to know them. And so that just means like the value add and the service that you provide is going to be different for different teams. And then sometimes like we do, I mean, it happens very infrequently, but we tell them out the gate, hey, this is our cadence, this is what we're going to try to do with you. And sometimes like the organism rejects it, right? It just isn't working. And so when instead of getting frustrated as the investor, we try to figure out a way that does work, right, for them. But that rarely happens. Usually they want that. But I think it's just having that consistency in conversation is just really important. And it's like, hey, if something comes up, we can bail on it. But I mean, it's so crazy. I mean, everyone has been through the COVID thing, but even through that, like coming in now, there's some founders I still haven't met, and we both like look at each other and we think we've met in person because we've spent so much time together, which is like just bananas.
Yeah. Yeah, that's insane. It happens all the time, I think, now. Everyone who's had that COVID meeting or investment who's now like, wait, you're like taller or shorter than I thought you were, or whatever it might be. And so, I hear you on
I
that
always play
front.
that game early on. It's a fun game. It's like we play against like how like after 6 months, it's like how old do you think I guess I'm pretty good at the game, and so like and then they guess back at me, and so it's always like a fun conversation to have.
Yeah. So Sean, you mentioned before that sometimes there are founders that maybe push back on the feedback or aren't as receptive as others are. How do you handle those situations? And then have you seen a trend at all where like that particular founder set ends up not being a fruitful investment for you at Parade or vice versa?
I mean, that happens all the time, unfortunately, for better or worse. I mean, look, it's not our company. We target around 10% ownership, so we're larger investor, but especially if it's the seed stage and there's like, not as much dilution, like most of the ownership is still with the founder. It's their company, and we invest in decision makers, right? And so like that's part of what we're giving money to, is to make decisions. I wish, I could say most times, like especially like things that where we have seen a lot of it, like fundraising, right? And just giving like just general advice. It's like we're not number one, we're trying to help, right? We're not trying to run your business. Like I try to be very, it becomes like a more emotional thing, I think, sometimes for founders, which I totally understand. But I think the second thing is, which I've been trying to communicate, especially in these like more challenging past year and a half in the correction or what have you, is like, especially as pre-seed and seed investors like we are, like we're really aligned with you. I know there is this like trope around VCs and VCs the other side of the table, but I'm like, hey, after you raise Series A and B, like we're pretty much like the same, right? We're as close to common stock as you can get. And we're not here to 2x our money. We're here to do way more. And so we're really aligned with you. So we're maybe not as similar as you think to the Series B investor. But sometimes we get treated the same way, and I think it's just like really like we've been through it for years, Rich, right? So it's like, but it's hard for a first time entrepreneur that's just gotten to know you over a year, that's been reading blogs, and hearing everyone speak at events, to like trust you because you're kind of actually saying things that are different from the narrative. And so I find that to be a little challenging. And then there's like the I told you so moments, and usually it comes from them if you have a good relationship. And you're like, dude, I was just trying to help you, right? And hopefully that just means next time you have a really hard decision that you have a better framework and way of having a conversation around it. But I think ultimately, like, good outcomes are going to be good outcomes, and bad outcomes are going to be bad outcomes. And sometimes it's not even those conversations and decisions that will dictate that, right? It's timing of the market. There are also so many other things that can dictate success. And it's such a long game that just like learn from when they make a different decision, and hopefully it's better. I hope it's like I'm giving them advice and I'm wrong and they're right, you know. But like when it's stuff that we've seen, it usually ends up that we are correct around that, but like that's not the point of the conversation.
Yeah. Yeah, no, I kind of think about it in a similar way. I actually don't give a shit who's right or wrong as long as we, the company, becomes collectively right. And so we're all, as you
Totally.
mentioned, aligned, aim for the same thing. And hopefully those conversations, sometimes hard, sometimes easier, ultimately lead to the opportunity to find greater success in the future. And I was looking online and I came across Y plus five. I hadn't known that you were working on this, and so like one, it'd be great to know like what derived this Y plus five event series. Two, what it is, and three, how can I get invited?
Well, you can get invited anytime. I'm probably not the best person to ask about it, honestly. So it's a brainchild of Dustin Dolganow, who I think you know, Rich. So he's a dear friend. We've done a bunch of deals together. And hopefully there'll be some of them will be very successful. But he had this idea of doing like going back to you were asking about how do you stay in touch with investors and founders, and he like wanted to do kind of a different, more intimate style event, and that's obviously what I'm more. I mean, it's a little bigger of a group, and it's a balance between GPs and operators. Um, Probably three quarters, one quarter, and mostly like around emerging managers. There's a lot of stuff that you guys do at Equal. And so there's probably a lot of ways to collaborate, but it's just like a really intimate setting where you can get to know people on a deeper level. And so when he said he was doing that, and then sorry, there's also LPs involved too, so it's like small number of GPs, small number of founders, and then a bunch of limited partners for us. So it's like a different dynamic and group, but it's an intimate setting, and that's kind of when I wanted to get involved and help. But by no means am I saying that I kind of ran. I was a starter of it, and so I was a part of the initial group, and I'm probably not articulating it 100% well. So have Dustin on here, and he will tell you exactly what it's about.
I will, after this session, I will text Dustin, one, for the invite, and then two, invite him onto the podcast as well, and so we can go deeper on that front. But, but bringing I guess the spotlight back to you and Parade again, Shawn. Just prior to Parade, you were at Flight, and so be great to get a sense from like what lessons learned from your Flight days have you kind of translated and kept over here at Parade.
Yeah, I mean, so I mean, you know the story, Rich, is like Flight was different. A lot of people ask me, how do you get an adventure? And I'm like, I got an adventure in this way that's super weird, and I don't think it's replicable. Right? It was like AngelList was under 10 people. They just launched this thing called syndicates, which were turnkey SPVs. I had a partner, Gil Penchina, who was a super angel in the Valley and very successful as an operator and as an angel investor, investing in companies super early, like LinkedIn and PayPal. Had been angel investing for many years. And so I had started, as I was operating, advising and writing small checks into companies. And so we got together and we said, hey, we think this AngelList thing is going to be something important. And we both need a ball. And we said, let's build a venture firm on top of this platform because we have access to these awesome people that are raising capital from the best VCs in the Valley. And we're writing these tiny checks and we don't get pro rata rights. And we find them before the VCs do. So that was one piece. We can get leverage. We can write bigger checks. The other side was, AngelList has all these people on there, people, family offices that want to get in a venture. Venture is a very insulated asset class. So that was like our thesis. And so we went out there and brought deal flow to these people and built up a brand. So just like starting a venture firm that way is like you can go start a syndicate on AngelList, but I don't think it's the same anymore. And or people ask me how to do it, and I'm like, I don't know, man. It was 10 years ago, and we had a first mover advantage, right? So that's number one. Number two is, I was cutting my teeth as a venture investor. My partner was an angel investor, and I think and I don't want to. I wasn't like a crazy angel investor, but angel investors should be different than VCs. They usually have a different full-time job. Like our job is as venture investors, we get paid to support our companies and whatever that means for your fund. And so what I learned is like I like regardless of where I sat on the cap table, we usually weren't like the lead check. Sometimes we wrote a big check in those rounds, but at the pre-seed and seed stage, we were second, third, fourth largest check. And I just started spending time with my founders and listening to them and probably not meeting them at this every other week cadence, but like whenever I saw them, I would listen and I would try to fill in those voids of what they needed help with. And I would get really positive feedback. And so I really like that partnership strategy. And when some of these companies started to take off, I was like, darn, I wish I invested more money. And so that kind of dovetailed into the strategy that we have at Parade is more ownership, small number of companies, which we were already like actually the pace that we're on now, we do like 4 to 8 deals a year. It's like not dissimilar from what I did at Flight because I like to spend time. And so I just like shifted that strategy to what I thought would be more successful to building a portfolio. Because if I wrote big checks and a couple of those deals where I was one of the first people to work with the founders, things would be very different for me, right? I could it just and because I would have ownership, I would have been able to do pro rata, and those companies have gone on to be very meaningful businesses, right? And so we just hope to do that with kind of some of our portfolio companies in Parade as well.
Yeah, yeah, and you mentioned the whole SPV portion of Angels, which I think it's most commonly known for. Are SPVs something that you continue to utilize today at Parade? Do you got like a separate opportunity fund? How do you think about continuing to kind of back those winners, or put more capital where you were most excited to do so?
Yeah, I mean, so it's funny. Our first fund was all first check into companies. Fundraising is really hard. It's really hard as a solo GP, and so we actually didn't raise as much money as we hoped to. About we raised about uh, 60% of what we wanted to. And so what I decided was like I didn't want to shift strategy. I wanted to keep the same concentrated strategy. But I knew how to do SPVs, and my investors were individuals and family offices. And luckily for myself, again, timing is not something you control, but it was a good market, and so people wanted to do directs, especially at that time. Because everyone was making money from everything they were doing during the end of that bull market. And so that enabled me to do SPVs and a lot of my follow on. And so I would do pro rata, super pro rata via SPV. Our second fund is 40 million bucks. It's 1-to-1 reserve ratio, so it's pretty traditional. What we learned also is like we are the first check. We do have a great relationship with most of our founders. We do have asymmetric access to data in our companies, and so we try to like buy up. We might start with 10%, but we want to get to 15, 20% as soon as possible. And so we try to, get ahead of that. So we have a fund dedicated. Now we used to do it with SPVs. Now we have raised a fund dedicated to putting more money into our quote unquote winners. And so we do it with our core fund. And so do we do SPVs? Yeah, but like way less infrequently. I mean, had to do them all the time with Fund One, but now we think we've created like a suite of products that are more aligned. And then where we go with Fund Threes, we probably just combine them all into one fund, and it's just easier. SPVs take a lot of work. It's a lot of herding cats. It's kind of what I know and what I was used to. I wouldn't say it's the most efficient. But even to this day, some of my LPs didn't come into that follow-on vehicle. I don't call it an opportunity fund because we try to get in really early out of it in it. We're not just doing pro rata. We're very proactive with it. We try to go in as early. If we do the pre-seed, we try to go in at seed and buy up ownership. Um, so it's a little different than a traditional opportunity fund. But some of my LPs said, no, we don't want to do it. We want to have the choice to pick which SPV we want to do. And like that's our prerogative. I think it's really hard to pick deals. Like it's hard on my end. And I'm glad I get to build a portfolio because I don't, I was telling a founder that we're working with, we're talking to right now. He's like, I'm going to make multiples on your money. I said, every one of my founders says that to me. And I really hope they all do it. But the fact of the matter is, like, this is the model. The model is not built necessarily by me. It's built by me, but the data that goes into it is from many years of venture capital. And like, I'm just going to lose a lot of money. It's just what it is, right? And so, but I hope all of you think you're going to like 100x, my investment. So, I love that about them, but it's just not what's going to happen. And so if you do an SPV and we have one big winner that drives all of the returns in our fund, like you'll probably miss it, right? So anyway, it's just but that's not, that's their business and that's how they want to run it. So I totally appreciate it. We're trying to be more efficient as Parade.
Yeah, and I get that too. We've also done SUVs on our end, and are can appreciate how challenging they are to put together, manage, and so forth, and understand the need to kind of collapse into one vehicle, hold it into a singular fund, so that you can actually more efficiently deploy the cash, and not also have to like guess to the number what you can give your founder or not, and say, I can put in an extra $1 million, not like million maybe, check back with me in 2 weeks and it comes 900, 800, 700K, and that becomes a problem with the founder as well. And so at the end of the day, you want to do right by them, and having the ability to give a firm answer is always appreciated by the founder.
But like ultimately, I'm the best. I think I'm one of the best in businesses at doing SPVs. You can tell me or not, but I've done so many of them, like 100, right? So I know how to set expectations. I know how to run the
Hmm.
process. Like I'm pretty good with the follow up. Like especially at the stage that I do them at, it's just like so many reps, like
Yeah,
hundreds, right? Like so
yeah, lots of
at
learnings
this
there.
point, so like hopefully I'm pretty good at it.
Nice. And then I guess keeping on the learning track there, prior to flight, you were at LiquidNet, Reach Local, on the operating side of things rather than investing. So I guess, what have you taken from your operational experience that you apply to Parade, and how you make investments and also network with founders?
I mean, I think like having operational background is the way to go and to be successful as a VC. I tell all junior people that. Obviously, it's not the only recipe. There's so many different well, my story is like back when I was graduating from business school from UCLA. So I went to Berkeley undergrad, UCLA for business school, and I thought VC was interesting, and so I used the whole student card, and I reached out to all these all these people. I lived in LA at the time, and I reached out to all these VCs, and I said, hey, how do you get in a VC? And this was like 2009, right after the GFC, the global financial crisis. Like, it's like this environment, right? It's a contracting, right? Things are changing. Like, it's probably not. It's a good time to be an investor, but it's probably not the best time to be a to try to get into the business as things are so many moving parts. But I asked this question, how do you get into VC? And they all gave me different answers, right? So I was like, okay, there's many different paths into this business. But I think if you're doing pre-seed and seed work, trying to find product market fit, like there's such that, like you were asking about the relationships with the founders, like there's such that emotional relationship that you need to build. And like a lot of it comes from empathy. And so if you've been in their shoes, have been an operator, raised money, built a product, and then like we've worked with a ton of companies too, and so because we're so involved, like we're not building the product, but we're helping with them like very close, right? So you still kind of feel alive a little bit. And I think those like data points and stories, you can like really share them with the founders, right? And so I think that just builds like deeper trust. I think a lot of at least a lot of the founders that we work with, I think that like they see value in that. I'd say if like I have no idea, you have better grasp on this than I do, but I'd say most VCs at our stage are former. I mean, maybe not you, Rich. I know you've been a VC for a long time, but like most of them have like operating experience. At least all of the people, most of the people I work closely with. So either I am skewing my opinion based on the people that I know well and work closely with, but I think that it's a pretty relevant sample. Um, so I would say like that's
Yeah, no,
probably
I
pretty common.
agree. I think probably most folks had some operating experience in the past. Not everyone. I'm seeing myself as in that latter camp, but I think just by the nature, when you think about the tech industry as a whole, there are significantly more operators than investors, and therefore, if you've started somewhere in your career, it's probably on that side rather than the investing side. And so, I think that data probably supports itself. I don't have the data, but I suggest that you're probably correct there. But you
I'm
mentioned.
not saying that that doesn't correlate with success either. So like not even
Mhm.
talking about that. I just think it's a good way to have frameworks to build and empathy and having been through it, so but like we know a ton of
Yeah.
operators that have jumped on that side. They're like, I don't like VC or weren't successful or were successful, right? So like you see it all across the board. So I don't think again, like I think there's many recipes to build success, but I think like I also send these junior people, I said, go operate. And like I had this and he still works with me a little bit. He's on our website, Rubby. He's a part-time associate. He like wanted to be a VC. He had a technical background from Cal. He was a double major. Like he had everything going for him. But he wanted to be a VC. And then finally he took this operating gig and he's like, I don't ever want to be a VC again. And I was like, I had to be like his dad, and tell him. And he went and did it. And like, he's like, you were right, And I was like, I'm just trying to like do what I would tell myself. So anyway, it's fun to see that you had a positive effect on someone's career.
For sure, for sure. And it's an additional point of connectivity. I think connectivity is super important here. And then, being an operator, one gives you a different experience, but two, it plugs you in different networks of people, which are super important. And you mentioned, I think, maybe 15 minutes ago or so, been doing this for 10 plus years. So you've been doing it for quite a long time. And that's also allowed you to have the time to make investments, see them through play out. And some of them may be, I think quite successful. And so I know, you were investors in Side as well as MoveWorks. And so both companies, which are working, I think, tremendously well from what I can tell, what, I guess, got you across the finish line on those two companies in particular?
I already answered the question, dude. You said it was the people, right? So, like, Bhavin, the CEO of MoveWorks, like, I knew him from his previous company. He was building and he was an entrepreneur twice before, I believe. I might be getting that wrong, but at least twice. And he, on the consumer side, but as he had this company and he was consumer and then he pivoted at the end to B2B and he sold it. I don't think for what he wanted to do, for what he wanted to sell it for, but like I think it was a good experience. And he was a good steward of capital. And he tried really hard, and his employees really liked him. And then we just built a really good relationship. And I just saw the guy's tenacity. And so when he was going to start, and then he took a bunch of time off, and then he was going to start something new. Like we started riffing on it, and he brought in Vibov, who I mentioned earlier, as his co-founder, and they actually talked about, one of the ideas was this idea that became MoveWorks, like using AI machine learning and chatbots to help companies solve their ITSM problems and ticketing and route that data faster using like NLP and models. And so this is before ChatGPT and generative AI. So they had to go build all these models on their own and kind of connect all of that data across, all of these communication systems, maybe ServiceNow, maybe Slack. And so that was their idea, and that's kind of what they've done and what they built towards. And so, you know, again, I didn't have a fund at that time. We were talking about SPVs. I was doing SPVs, but I said, like, this guy, I got to bet on this guy. He wants to be a public company CEO. He's like so determined. Like I saw that side of him. And I wouldn't say everyone was, we did kind of approach a period, and I don't know if we're still in it now, but where if you were a second time founder and you'd raised money, you would get a big term sheet from a lot of venture funds out there. That was happening, right? The past few years. But there was a time before that where that was not happening. And if you didn't have the right background for the problem, you were a consumer founder, you were starting an B2B. He was not just starting a B2B company. He was starting a B2B company selling to like big Fortune 500s, where you're selling with long sales cycles. So it was especially hard B2B company. But I was just like, this guy is tenacious and he wants this more than anyone. And so and then like Vibov and I just hit it off, and I just thought they were going to be a killer team. And so I was in. And so that's why I invested in the company. They ended up doing their pre-seed from Lightspeed, but I wouldn't say it was like they were similarly working with Arif at Lightspeed, who I didn't know at that time, and jiving on the idea. And I just didn't have the fund to write them a term sheet or anything like that. And so I kind of had to fight for my small position, but very lucky to be one of their first investors there. And then Side, like also very similar gal I met initially. When we built the marketplace at LiquidNet, we built a private shares marketplace. We raised strategic capital from LiquidNet and built it kind of as a subsidiary. And we rented office space out of what was then an accelerator in LA called Amplify. LA, and it's a fund, and so they were all the accelerator companies except for me and my co-founder had our small office in LA because LiquidNet was based out of New York, and so we built our sub out there. And so Guy was one of the portfolio companies of Amplify, and so that's how I met him. And then I actually ran into him a couple of years later, actually at an event hosted by someone we were talking about earlier, at a Giants game, and it was like, dude, I haven't seen you in forever. He's like, I moved back to SF and I'm working on this new company. and he told me what it was about. It was in the real estate space. He wanted to build tooling and software for the best realtors to empower them. Because if you were a top selling realtor, you were giving away tons of money to your broker just for being part of their firm. So he wanted to empower these top tier agents. And I was like, yeah, because that was my mom. My mom shifted to residential real estate in the Silicon Valley in the early 90s and was the top seller at her. She went to different firms and had to pay the broker a ton of money. And now, my mom's a little older. She still dabbles in real estate, but like this would be perfect for her at that time. And so I had a really deep understanding. And so we riffed on it. And so I had that relationship. I knew Guy was a tenacious, he wanted to win. And like he's also like to a T executed. He's lucky it's obviously harder time in real estate right now. But like that timing, that opportunity, that vision that he had, and more importantly, him and his co-founder Ed, like they were a great team, and they just had this like singular vision. So I was betting on them. And that one, I think, I'd say like those two examples, like the side is the stuff we know, given my experience, like seeing my mom build a business. And I remember sending out the marketing mail. That was like one of my first jobs when I was 12 and 14, like putting all their mailers together, and they'd pay me like nothing. But I wanted to support them, right? And then with Bhavin and they're in the ITSM space, like I had to learn about that. Like I knew about ServiceNow, but I didn't know intimately of what they did on low level ticketing, et cetera. So I had to like learn about that. And so it's one stuff that we do know and stuff that we don't know that you have to learn about. So
No, no, I love that framework of like, I know versus wanting to know. I think lots of us investors kind of, think about it in the same way, but don't articulate as clearly as you had. And so I might steal that line as well. And then I guess, both MoveWorks and Side were done many, many moons ago. It'd be great just to kind of hear more about a more recent, Parade investment and what about that individual founder or founding team got you over the finish line, since that's kind of your kind of priority there.
yeah, I can talk about someone that I just talked to yesterday. It's Rohit from a company. His company's called Coast. Rohit Prakash, and he's a guy I've known for I think almost a decade. He started this company called Town Squared, which was in the local space with his co-founder Napul. We were introduced actually after I left LiquidNet, before I started Flight VC. So probably it was Napul, his co-founder, 10 years ago, because they were building something. And they had some really good investors, and they're like, oh, they're building something in the local space. I worked at a company called Reach Local, and we helped SMBs advertise online in the earlier days of internet advertising. I hate saying that, but it makes me feel real old. But that's what we did. So we worked with like a mattress store or a plumber, and so they were building like more of a consumer product, like a social network for these SMBs. And so they had raised a bunch of dough, and we were talking about stuff. And so it not yeah, it ended up like just wasn't something that I wanted to do, or and some I wasn't a person that they really needed, but we kind of maintained a relationship. He stuck with it over the years and made it work, and they were pivoting into different kind of products. And he really hit on something, I'd say towards the beginning of COVID, or towards the middle of COVID. It was like they found that folks working kind of away from a desk. So didn't really use things like Slack. They didn't really use pieces of software. They were still living in pen and paper. People working in like facilities. And so they wanted to build this piece of software, which is like Slack for the deskless workforce. And so using a communications tool to build in like workflows and other pieces of software that they needed to input this data to. And so they wanted to create like chat and like a series of workflows off of that. And so he came to me. We'd known each other forever, and he was like, "Hey, we're thinking of raising, a seed round after this pivot, a little over a year ago." And so yeah, I mean, it's someone that I really knew really well. We had invested in something adjacent that we had deemed that wasn't completely competitive with what he was doing, and I just was like really kind of dug in to kind of like, why are you still doing this? And he just like said, we've been working on this so hard, for so long and so hard, and it's finally working. Like we're getting people signing up. We see the potential to charge them even more cap money, and then we get a lot of interest from we're getting a lot of interest from a lot of big enterprises. We want to see a lot of these sales cycles through. And so we did a bunch of diligence and work. Even though I'd known him for 10 years, you still got to like cross your T's and dot your I's. I've learned that the hard way, and really kind of appreciated kind of what they were solving for. and honestly, in the past like 3 months, like they've signed some big contracts. So it's like, it's still early days, but I think has a lot of potential right now. It's got the revenue numbers are in the they're not in the double digit millions, but we're getting there. I think they'll raise a good amount of capital in the future to really help propel kind of their new this product market fit that they've achieved. But it's also just awesome seeing someone stick with it and have the determination. And um, I think also we look at our portfolio. People is like, you always ask me is like, what have you noticed from your founders? And I know I'm straying off your question, but we have some founders that they're in a hard spot. Like a lot of founders in a hard spot, right? Trouble to raise money. But man, some of these people, these guys and girls, they are so resilient. They are not giving up. They're making every last dollar last. And I've told them this. I'm like, again, our business, our model is we're supposed to lose money. Not a lot of these, all of these are supposed to make us like 100x. I wish they would, because this would be the game to be in. But it's just not. It's just not. It's not how it works. But they're making it work. They're being dedicated. They're sacrificing their families, their lives, their opportunity cost, to see their visions through. And that makes me happy that I made the investment. I bet on the right kind of person. Then I usually, I always after I'm sure you always have a postmortem after things don't work. I think if you had a thesis and it didn't work for whatever reason, and it could even be decisions that they made, but like if they had the dedication, a hard market to keep going and trying to figure it out and hope that the timing eventually flips on their side, but at least giving them that chance where they could have just packed it up. Like if any of these companies came to me and said, hey, we're done, we can't do it anymore, I'd say you really worked hard. I totally get it. But they're not even doing that in this market. So like that makes me, and Row is a great example of that, right? Of perseverance and just like making it work.
Yeah, no, it's a really interesting story there because obviously there are times where founders have to, like, as you mentioned, have every dollar, penny, and dime stretch as far as possible to give them the time to figure it out. And it sounds like he really dedicated his time, really believed that, like, the broader thesis that he was tackling was correct. Maybe the first or second approach wasn't the right one, but has kind of figured it out over time. I think that point around resiliency is an important one. And it's also just a great trait to look for in a founder you look at the back.
Yeah, still a lot of work to do, but it's it's
There
it's cool
always
to see
is.
that. Exactly.
And it's interesting. I keep saying you guys as a team, and you respond as we as well. But you are a solo GP, and so what is that process for like getting a deal done? I presume there's not like an another person or investment community that has to say yes alongside Shawn. So what exactly happens?
I mean, again, it all starts with the person and their idea, and like it's like after 2 calls, I always tell them, I'm like, you might be able to raise money, but I want to be as excited about investing and working with you as you are about building that business. And so sometimes, and I don't think we share this enough within BC. It's like, hey, I'm just not into it. I'm not thinking about it maniacally. And then you send them a past response that's like, oh, whatever, or something. But it's like, I really wish I could say is like I'm just not as excited. It doesn't mean you're a bad founder. It's just like I'm just not waking up after 2 nights and whatever, still thinking about it, right? And I want to be have that feeling, right? And that's such a stupid way of passing. And so we say, oh, we don't know about the market. We want to see a little more traction, and like, but ultimately we're just not that excited. And that's fine because they have to find another investor that shares that excitement or that conviction in that investment opportunity. So like I think that's what I always try to figure out. But we always, like I said, even Bro, who we knew forever, we still did our work on it. And so it's like I always say, we have this thing called a memo. We put it together. We do technical diligence, even if it's pre-seed. We do customer calls and references, and it usually outputs this 20 to 30 page document that we have to put together. But I think ultimately, it's like we're excited about the person. We're excited about the opportunity, and hopefully something along the way doesn't talk us out of it, but we have our checks and balances in place to make sure that we're really excited. But like we're such early investors that you and I know is like there's not that much product. And so we have to see like, are they going to be able to hire people? Are they going to be able to recruit? Hopefully the market's big enough if it's something that's not already established, like with a competitor like ServiceNow, right? Whereas like where MoveWorks is going after the ITSM space. Like we know, and at that time, ServiceNow was like a $10 billion company. Now it's I think 40 billion or something. So that's a big space for MoveWorks, right? Like we know the real estate market inside is huge. Coast is going into an area where they're kind of building a market of software for these, offline people. So it's a little different. You have to like bet on the market sizing. Um, but we try to figure these things out. But it's really ultimately dictated by like, do we want to make a bet on that space and that person, and then we find the I think find the you can always talk yourself in and out of a deal,
For sure.
you
For
know.
sure. Yeah.
Um,
And yeah, no, it's interesting that like, that point you made about like, hey, like I'm just not into it. It's an interesting one too because it's hard to tell someone that you're not interested in what's like their life's work. At the end of the day, it's like their life's passion, and it's a hard pill to swallow when someone's like, I just don't get excited by this, you know.
I
It's
wish I could respond. I wish I could respond to that because sometimes I'm sure more than you'd like to admit, like that's the reason, right? You're like, this
hmm
is cool, but I'm just not excited.
Yeah, yeah, yeah. No, that's right. That's right. And then, you and I have both been actually at this for quite a while now, and so I'm just curious, what's changed about like your investment philosophy from like day one or year one of Sean investing till today parade.
I don't know. I think I'm more efficient. I know when to say no. Like I try not to take meetings when I know the outcome. I mean, you're pretty good at this, honestly. So like just getting ahead of what I want to invest in and what I don't want to invest in. Sometimes I want to learn about something or meet someone or they come very heavily recommended. So even if I'm not super excited about the space, I take the meeting. Um, but sometimes, and I just am trying to get better at my frameworks around saying yes and no just to my time. And so I'd say I'm better about that. I don't get caught up in FOMO. I don't anymore around events, around deals. Like, um, some friends in the business, they're like, you do weird deals. And I'm like, do I? I'm like, maybe they're just like not hot at the time. I don't know. So I think just being comfortable in like the decision making. And I think that just comes with like maturity and reps. Like I didn't know what I was doing in the first few years. Ultimately, like you didn't have those 10,000 hours, I didn't. And so I had to build towards that. And I'm lucky that I had some people that I built relationships and had in my orbit that took my money and ended up doing really well. So I think that helped. And now I'm just trying to replicate that. But I'm just trying to be more efficient all across the board. And I have to because I have two kids at home. They're 10 and 6. Like I want to be a part of their lives. I teach at, part-time teach in the spring at UC Berkeley. I want to be a good husband. Like, I want to, I need to have time for myself too, right? To like help my mental health and be a good partner to my founders. And so like all that stuff takes time. I can't just run around to networking events because I have no kids, and it's different, right? So I'm just trying to be more efficient and shift as I've evolved as an investor.
Yeah, that makes sense there. And then, um, I guess closing out here, just a couple more questions on our end here. You mentioned being a guest lecturer at Cal. One, obviously you went there, so there's got to be some affinity in that perspective. But how do you think about that fitting into this, like your personal and professional interests?
Yeah, I mean, so I'm not a guest lecturer. I was a guest lecturer. I'm an actual lecturer, so I have my own class. Look, I even brought this prop with me. I'm faculty, dude.
There we
Faculty, right?
go.
I'm not, that's a real card.
Adjunct Sean is here.
Whatever, man. They call me professor. Okay, so yeah, no, I teach a class. It's 2 units. But it's a commitment. It's like it's 3 hours for 10 weeks. I was thinking about expanding it, but I just honestly I don't have the bandwidth, and so this will be the third year. Before that, I was a guest lecturer for another professor that was teaching that class. So I've been involved with the class for 7 years. It's called New Venture Finance. It's about how to capitalize your business from starting it up to taking it public. And so it's a lot of ground to cover in 30 hours of class time. And then we bring in awesome guest lecturers, mostly local people and mostly Cal grads. I'd say 80%, I bring in, I have 9 guest lecturers. The first one's Kevin Chu, who actually, the funny thing is the class is in Chu Hall. And he's going to come in and talk about crypto in our first class. And he's a Cal grad, my year at Cal. And so that's going to be kind of funny. But like we're trying to bring back people that don't come back as often as you would think.
Mhm.
And it's just been really cool to, give back. It was something I always wanted to do. I don't know if I'm going to do it forever, but this will be the third semester, and I've learned a lot. But again, it's a huge commitment. And when I do it, and people say it's good for your deal flow. It's like that's not why I did it. I did it because I wanted to go teach. It was something I wanted to do.
Mhm.
Maybe that would be like I didn't know. Maybe that was what I would do after career after investing, or that'd be my next career. But like you got to do it to figure out if you want to do it. And so we're kind of in that phase of trying it out.
Yeah.
But I don't do it for deal flow or anything. It's just cool to go give back to my alma mater.
Yeah,
But
that
it's
makes sense.
it's not Stanford. It's not Stanford. You know, a lot of people Stanford has that. Stanford's closer to Sand Hill. Obviously, I think you can appreciate, and you'll share it. Like there are a lot. Everyone here is like a lot of Stanford grads. Like us Berkeley guys and girls are kind of in the minority, and so I want to put that effort in to help them build that institution up because we have a lot of esteemed grads that have come out of that school that have made an impact, especially in tech and VC.
Yeah, yeah. Well, the Cal grads punch above their weight there, so you got that going for you. And then maybe just ending on a couple fun questions here. Cal, was part of the Pac-12, which exploded over the last like 6 months, and so you guys are headed to ACC now. What are your thoughts on that?
I don't know, man. Cool road trips. I think we're me and my friends are planning on going to Florida State. I didn't think I'd ever say that. That would be an in-conference game. I don't know, man. But like, I don't have that much insight. But I think this year, like Washington State and Oregon State retain the rights to the Pac-12. So like I
Yeah,
mean, college football is turned on its head. I don't think it's in a place that anyone would have guessed like 5 to 7 years ago. So why can't it go back and Pac-12 be resurrected? I don't think a lot of these teams want to be traveling to Florida State and they want those rivalries. So I don't know, man. I don't know. I don't have much to say. To your point, it
yeah,
happened so dang fast. It's kind of like what just happened here. But the good
yeah.
thing is
It
like we
was
get. I
wild.
think we're gonna play Stanford every year. We're lucky that that school stood by us. And we're together. And I think we'll still play like UCLA and USC are like our other kind of bigger rivals. So like there'll be some continuity, but change is good. Just got to get used to it.
Yeah. Yeah, yeah. And then the very last question here. You are an immense sneakerhead. So it's actually a two-part question here. One, how many kicks do you own? And then two, what's your favorite pair?
Don't know the answer to the first one. It's greater than 100, less than 200. Like I've been into sneakers since like forever, but like I've been like collecting them since I was like 14. So that's 1994 for you at home. And so like I have some pairs like falling apart from when I was 14, 15, 16 when I like stabilized at my current size. Um, Favorite pairs? Well, I bought you some props here in advance of this question. So I'm pretty like traditionalist. I like old school like stuff from when I grew up. So my favorite pair is just like a pair of Jordan 3 black cements. So this is like my favorite pair of shoes. And I really like them. And then I got if for all like you hype beasts like the collaboration and the expensive stuff on Goat run by Eddie, who's also a Cal grad, by the way. I like these. These are my first pair that I bought. These are off-white Prestos. I bought these are the first pair I bought on secondary, which I don't like to do very often. But I really like this pair, and I think it was when I closed Parade One. That's what I did to after I did the first close. That's what I did to like, hey, pat myself on the back. And then I was wearing these today. These are also another traditionalist, like just like 97s, silver bullets, like I like stuff from the '90s that from like make me feel young and make me think back to that nostalgia and that time. And so, yeah, I got a lot of shoes, but my whenever I buy a pair of shoes, it's not I'm not a collector. I buy them and I buy them to wear, and if I buy them and I'm not wearing them, I get rid of them. And I don't necessarily need to flip them on Go and make money. Like that's I'm in other places where I'm highly leveraged and try to make way more money than a couple $100s on shoes. And so like it's like if I'm not wearing them, I try to get them. I have other people that have my same size. I'm like, hey, do you want these? There's some cool shoes, but I'm not wearing them. And I try to flip them to other people that would bring joy to them.
Nice. Now passing it on, and I like the also ode to yourself there on a nice, fun closing gift. So that's awesome to hear. And Sean, this has been great. I think we've all learned a lot more about you and Parade, and appreciate you sharing those insights and the story of Parade and how even the name came about, which I thought was quite interesting. And so, thanks again, Sean.
Thanks, man. Thanks, Rich. Thanks for having me, man. I really appreciate it. And I hope to see you in the real life soon.
Definitely.